Well, it's a good question. First of all, thank you for having me. I used to work at a firm called Bessemer Venture Partners, and at Bessemer, my first deal actually was in Snapdeal, and we invested in 2011. And actually, NEA, the firm I currently work at, is a large shareholder in a fund that invested in Snapdeal. So in both ways, I'm exposed to Snapdeal. E-commerce in India could be the best and perhaps greatest opportunity as an investor over the next 10 years. And the reason for that is simple. India has 1.2 billion people. Less than 2% of commerce is transacted online. What's bigger than commerce? What's bigger than buying and selling stuff, right? Nothing. And so if you think about that, by the way, in the US, less than 7% of commerce is done online. So it's still really low there too. And Amazon's, $150+ billion company. Sure, one might think that the price of Snapdeal at $5 billion or the price of Flipkart at $10 billion is high. But if you think about it in the opportunity set relative to where it could be, that could be cheap. So I'm still really excited I'm actually very bullish on the space.
Right. So what are you betting on? I know perhaps what the answer could be, but if you look at the sort of combination of factors that you're betting on, what you've highlighted is really the size of the overall opportunity and it's sort of the relative size of the online market. But there's a whole lot of other things that have to work, and I'm assuming the company has to make profits at some point.
The company, in order for a business to be a good business, it has to be profitable at some point, right? Yeah. Otherwise, it's not a business. I bet on a couple things, and we as a firm, NEA, bet on a couple things when we invest. We bet on the team. The team has to be world-class. And what we saw with Snapdeal when we invested a couple years ago, Kunal and Rohit, the founders, are world-class. They're inspirational, they're adaptable, they're creative, world-class. Market size is there, and we love the product. We think Snapdeal is a great product. It doesn't hold any inventory, right? I mean, it's unlike other competitors in the market. And I think the brand is getting better and better and better. I mean, there was just you might have seen the Amir Khan ad that came out a couple of days ago. That's the type.
That's your money.
That's our money that we're spending to, but it's
build the brand. Yeah.
But we trust that. Yeah. We trust Kunal and Rohit. So, look, I think there's a space for a vertical player, and I think that player will be Snapdeal. Right.
So, how many players do you think could potentially survive? Not survive. Or do well. Let's say if you were to fast forward about 5 years from now.
So, in the U.S., we have Amazon as the behemoth, but we have other companies that have been very large too. So, Diapers.com was an NEA company, and Diapers.com was acquired by Amazon for 500 million plus. I think I might have gotten that number wrong. A large number.
It was acquired.
It was acquired for a large number. Zappos was acquired for a large number as well. I think 800 to $1 billion, and so I think there is space for multiple players that are north of $100 million in valuation. Now, then the question is there space for a couple players north of billions? I think the answer is yes. In a country like India that's so big and soon to be the biggest, right, in terms of population, why should there have to be only one player? I mean, there can be many players, and there can be vertically integrated players that focus on one product, baby diapers, for example, or beauty. And those can also be billion-dollar opportunities. So there's still a huge opportunity.
Right. So, but in the race, which is perhaps the position that we are in today, a lot of people are going to, or some people are going to move forward, and some people are going to move back. Is capital the only defining factor? Or what's going to make the difference between those who sort of shoot ahead and those who don't?
No, I don't think capital is it. I think capital is helpful. Why does a company go out of business? Because they run out of money, right? So it's like the baseline. But there have been a lot of great companies that had a lot of money and fizzled out. And likewise, there have been a lot of companies that did a lot on very little capital. So capital is a baseline, is the table stakes, right? You need a great team. You need an innovative team. You need a great product. You need a great brand. You need logistics systems that these companies are developing. You need payment gateways that these companies are trying to develop. You need innovative solutions to challenges that might be very local, that we don't see in places like the US. Logistics is an example of that. So that's what's going to define the winner or winners. And I think there's a reason why you see real differences being done or created out of these companies like Snapdeal and Flipkart, and why it's not that easy for a company like Amazon to come into India, or a company like Alibaba to come into India and just win. I mean, it's not that easy. There are local nuances.
Right. So if you were to look at the next couple of years, I mean, so e-commerce is a big play. Sharing economy in some ways can be a big play. Do you see themes which are new, and then new themes that are common both to, let's say, developed economies like the United States and developing economies like India and some other countries, or do you see sort of themes which are going to be unique to each of them?
Well, NEA is an investor in Uber, and Uber is a transformational company. It is a company that has the potential to change how transportation is done in the world, right? I mean, there are cities now where the price of an Uber, a shared Uber, is cheaper sometimes than the price of public transportation. If you can decrease the price of public transport, you can increase the amount of people who can suddenly get access to jobs in cities that might have been, or places in a city that might have been out of reach. So I think that there are similar companies that will work in countries like India that have worked in the US. Now, as an investor in Uber, I hope it's Uber and not some of the other competitors, right, that are more local perhaps in nature. Airbnb is a company that's taken off in the US. I was in Mumbai last week, and I stayed in an Airbnb, even though I could have stayed at a hotel. I stayed in an Airbnb, and the experience was terrific. It was actually, in my opinion, better than an Airbnb because I got, or better than a hotel because I got home-cooked food, you know? So I think the collaborative consumption, the sharing economy will happen in India. The question is, what are going to be the nuances? What are going to be the regulatory hurdles that they have to overcome? And what are the local nuances that these companies have to understand to be successful? I mean, we're sitting here in New Delhi, right? I can't think of a city where Uber has stumbled more than in New Delhi, right? And there are challenges that we as a firm, as well as we as investors in these companies, we as the company, let's say, have to realize when we come into these places. And in some places, I think there's a chance we could lose. But as long as we're really cognizant of everything that's happening and partner with local folks on the ground who can help us navigate those, then collectively we can build transformational businesses.
Right. So, I mean, companies like Uber have had a head start, right? And yet you've had local players who've come back with strong products, or fought back, or come out with new products. I mean, you've had an example in China. In India, you've got Ola and Meru cabs and so on. So, is there a sort of time premium on some of these technologies and products, which may be not the case in other kinds of technologies and products?
Well, I slightly disagree with you. Your framing. And the reason for that is because Meru was around long before Uber was around, right? I actually think Ola was founded after Uber, but I think Ola was present in India before Uber's entry in India. I could be wrong.
Yeah, they were, but I mean, there was more
right, it was a different business.
Call center based.
I agree. You know, in general, I don't think there are some types of industries where first mover advantage is what we call it. First mover advantage helps. I don't think this is one. And the reason I don't think it's one is the brand really matters here, right? People need to trust a brand. And as long as they start to trust it, then as long as that first company isn't the one that they pick to be the one that they trust, then there's real opportunity. I'll give you an example. Facebook was not the first social network, right? Google was not the first search engine.
The 29th, I think.
Yeah, I mean, it depends on what you count as a search engine, right? But it certainly wasn't the first 5. So there are opportunities where that matters. Whereas there are other industries where you lock up the supply, you lock up the demand, it's going to be hard to compete.
Right. So tell us about your social impact investment fund, and what kind of stuff have you been doing there?
So earlier in my session today, I mentioned that when you land in India, I flew into Mumbai, when you land in India, whether it's Delhi or Mumbai, you often see kids playing cricket, right? And the first thing you'll notice is that for their wickets, they're using a tree stump, okay? What is a better example of Jugaad, of frugal innovation, than that? So India is the leader in terms of frugal innovation. And I define frugal innovation as effectively using tools or creating products with really low cost. And frugal innovation is more than just product innovation, right? There's service innovation, like Aravind Eye Care did in terms of how they've really perfected and cheapened, lowered the cost of really high quality surgery, eye surgeries. I set up S2 Capital. S2 Capital is my own personal social seed fund that I founded with a partner. And we invest in young entrepreneurs in the developing world who are building technologies that are changing lives locally. An example is I've invested in a young woman here in India who has created sanitary birth pad kits for 100 rupees. So basically, a woman who is birthing, right, may go to a hospital where they might not have sanitary equipment. So what if you could sell these kits for 100 rupees to these hospitals, and now suddenly the rate or the risk of infection for that woman decreases a lot. That's an example of Jugaad and why I set up S2. Now, I also think there are companies that might not necessarily be initially seen as frugal innovation, but touch those living on less than $2 a day, the bottom billion, or really even those who are not in the middle class, which might be earning more than $2. Uber we talked about, arguably, if they can decrease the price point of transportation, that could really impact all sorts of people. The mobile phone, I mean, when people came out with the mobile phone, they didn't realize how it would touch people. Over 700 million mobile phone subscribers, or unique people using mobile phone. I think over 1 billion mobile phone subscribers here in India. Subscriptions, that's right. At NEA, we're investors in a company called Coursera, which mission is simple: access to higher education for everybody for free. So I think there are instances of companies, traditional technology companies, that just by what they do can touch those living on less than $2 a day. So I think there are different solutions for different issues, but all of them are important because, let's face it, one of the most transformational means of social change is business, is capitalism, if done the right way.
That's a good note to end on. Thank you so much, Sheel, for talking to us.
Thank you for having me.